what is up, dudes and dudettes? This is Dude-Diligence here, and today we're gonna talk about, inflation isn't so bad. If you really think inflation is really bad, well, think again. Why? Because you actually can make money out of inflation. So this video, I'm just gonna show you how, and I'm so sorry that I have been slacking a little bit on YouTube. I'm getting off of the trail of trying to do daily videos because I really just don't have any time. Recently got promoted at my work. More and more people want me to invest their money. And, every morning I wake up at 5:30 and do all my stuff. And usually I make my videos either in the middle of the night or trying to do it after market. And a lot of times nowadays I have other meetings and 1, 2, 3, 4. And my business partner and I are trying to get into a cable related utility business that we have a very interesting business model that a lot of people want to take a look, and I have to spend time doing that. And more people want me to invest their money, and I got different people have different demands. This is why I always say that it's probably better for us to start a fund, but when we start a fund, there are implied costs and all those kind of stuff, and things get a little bit complicated and all those kind of stuff. This is why we haven't been very present. And on Patreon, yesterday I did something controversial. I just said, I doubled down on oil, and then nobody replied, right? Because, that time oil dropped by like 3% on it. Let me show you. So this is the US oil fund, right? And yesterday, if we look at an hour thing for yesterday, it was, when was yesterday? So it's let's do minute chart. Yesterday we have a huge drop down over here, you see, and then I sort of like texted them over here. I was like, I'm doubling down on oil, and on main chat everybody is panicking about, because a lot of people are in PBT is right here, right? Our average is somewhere around our Patreon, I think our Patreon and our Discord average is around $11, which in my view it's not really anything to be panicking about. On Patreon I set a soft target at $15.3, and I haven't changed our target, so I don't understand why people are panicking. Yesterday when there's a huge drop, I just literally just said, hey guys, I'm doubling down. And Dude Zero and everybody else is a little bit salty about certain things, and they're like, oh, you don't post your huge plays. There's no huge plays to be posting. You literally just whatever at this point, no, not here. Sorry, whatever at the point where there's a huge dip, you just like get a bunch of options and just see how it goes, like right here. I just double loaded my options, because at this point your weekly options probably decreased by 50% due to theta, right? Because yesterday was Tuesday, and then the actual price of the option actually decreased by about 50%, because you drop about 3 to 6% and you do the delta and you do the implied leverage. It's probably decreased by like 50%. This is why I always say that you guys should enter option trades or anything in this matter, especially trading commodities, small positions, so you can, a lot of those speculative long squeezing, like we call this long squeezing, right? Because there's not like actual fundamental value change in oil price. It's just, Russia withdraw some of its troops, but in reality, the cost of oil still is going high. And then we're going to talk a little bit about that later on in this video, and hopefully, this video is short, but the entire logic of yesterday's double down is, I think it's temporary. I think it will go back to wherever this is in no time today. So as I predicted, it went up by this. How do I know it? Because I've traded this commodity for about 6 years. I should have known at this point. So then this is what I did. I liquidated most of the position, around the highest point, and just waited for a post-market drop, because we all know that US investors like to long oil, because we sort of live in a little bubble where our oil production actually is not self-reliant. It's the most unself-reliant country in the entire world. And a lot of Asian population like to short it, so you will have a flip over dynamic every single day on crude oil, and the price will probably stabilize around like 63 on USO. So whatever we do a conversion on WTI or on Brent, whatever you use, right? If you guys want me to post a video on how exactly do you trade commodities, or how exactly do you use an oil futures to really look at where the price of oil is gonna go, or just my general assumption or assertion of the oil market, I can make a video about that. But in here, I'm just here to tell you guys about like what are some, people are panicking, which I don't think is a good idea. And, it's another justification for me to say that, I didn't post a specific trade, because anything oil related, you can just do exactly double down. And today you will have the same result as I do. And sorry about that. I know that's a little bit sort of like an arrogant statement per se, but it is what it is. This is how I think. Same thing here, right? Remember, same thing here. Halliburton, and also like this is an oil field service company. It even have a better beta than the actual directly oil companies, because a lot of people are speculating that U.S. is going to drill more oil. Which there might be some regulatory barriers there, but I think that might become a trend, because if Russia and all of the oil suppliers are being really naughty lately, it might become a self-reliant problem. So self-reliance is what the Republican side of the government really strive for, but right now we have a Democratic House and Democratic Senate. So I'm not really sure how the bill is gonna really pass, especially a lot of the residual effects of Obama's EV policy and a lot of the green energy policy sort of have a residual effect on the market. Therefore, we're looking at a rapid price adjustment for lithium and EV stocks, as well as a price resurgence of the oil field or oil services. But we can make a longer video to explain that and put some detailed math in terms of like a short-term aspect, because long-termly speaking, we don't really know unless we get the new congressional bill coming in regarding ESG, regarding EV, and regarding oil extraction and rigging. So at this point, this main purpose of this video is just telling you guys, inflation is going through the roof, as you can see right here, right? For the 12 months, energy is increased by 27%, and if we apply the energy inflation value onto the chart that we're looking at for, let's just say, the oil fund, you will realize that the mathematically speaking, in the last 12 months, let's just so in the past 12 months, let's just do February 16. I will show you guys February 16, 2021. So around here, okay, so around here. So if you have a 20% inflation, right, and then inflation spills over to other sectors, which means a 20% increase in energy inflation literally means that 20% cost is gonna get transferred into food industry, transferred to all items. Why? Because overseas freight, we don't have any EV ships yet. We don't have any EV planes yet, and all of the major transportation, bigger trucks are oil based. Okay, so that means we will have at least 2x leverage. That means the probability of oil price increase about twice the amount of 27%, which we just do 50%. It's super high. So if you did, or if you listen to our channel from, I don't know, February 2021, which in reality we haven't even started the channel, but we started the channel around June or July 2021, and we said that oil is doomed to be $90 or hitting 73 or hitting 95 or whatever. And if you listen to that and just progressively longing oil along the way, you will make about 100%, no problem. Okay, and our soft target was actually 50%. So if you do 50% of that, 15. That's only 52, so around this line. You see, we mark our position, we mark our price adjustment and future prediction on our charts, and then you can go back and watch our old videos. You will see it's all there. But in old video, you just won't see that part. Everything is it looks like this, and then people are saying it's not gonna go up over that line because they're afraid. But then it just jump up. Okay. And again, this is how you make money from inflation. You just bet on the most inflated item, or the what we in academics we call that the most propensity item towards inflation, which is oil. Like literally, oil. If inflation increases, that literally just means oil prices just go through the roof. And what's gonna happen when interest rate hikes? Well, if you guys like this video, smash the like button and subscribe. And if you want to see a follow-up theory on oil, we can talk about if interest rate hike, what's going to happen to the general oil price. on, you know, whether supply demand still take priority or whether the residual effect of the interest rate hike would actually hurt oil price, we can make a video about that. But it really depends on if anyone really watches this theories or whatever. Okay, see you guys on the upside. This is it for this video. Hope you guys love it. And remember, you can make money on literally every single political or every single economic movement, as long as you have the heart and you have the grit to do research on it and sort of back trace and build a model and make a clear exit plan on when do you exit and when do you sort of ride a wave alongside of it. All right, see you guys on the upside.